All right, so beginner traders always ask me, specific amounts of money that they need to actually get started trading, and it really all, depends on the actual trader and person in general. How much money do you have? Today's time is different than when I first started trading. There was no such thing as micro futures, meaning you could trade the micro indices or some of the micro, commodity markets. Today you can actually do that, and which means that you don't have to secure a boatload of money, meaning capital to put away or save to get started trading. I will say this before I get started is that you really need, if you want to start and be successful in trading and be consistently profitable, to make money on the daily. Anyone that's interested in making serious money doesn't mean making $10,000, $10,000 a day. I'm simply trying to say that to where you can make a few $100, maybe $1,000 or more a day, depending on, but that's all depending on the number of contracts you trade and how much time you spend in the markets. So I've covered in videos, about time frames as far as what you should possibly look at to recommendation to trade, how much time you should spend in the market, how much time or how much money you may want to start with. But the money piece is going to be different depending on the person. Now, today I want to talk about if you could take $200, flip that money or compound that money, all right? Meaning opening up your own personal brokerage account and putting $200 in it today and start trading. Is that possible? Yes, it definitely is, because there are several markets, in particular like the indices, to where you, for example, the margins are lower. Trading micros now. We're talking about micros. So, for example, if you're interested in trading the MES, which is the micro E-mini S&P 500 futures, it's only $40 a contract margin. Again, it's going to be also dependent on your broker. Some brokers may be $50, okay? Depending. Some may be higher. But the broker of choice I use, which is AMP Futures, they offer a variety of platforms in which you can trade with and use them as the broker, okay? Now, I trade with NinjaTrader. I know someone's probably going to ask, Mike, how is it that you're able to trade with NinjaTrader and also use AMP Futures? That's only because I'm grandfathered in, because I've been trading for 13 years and been using them for, just as long from the beginning when AMP Futures and NinjaTrader were doing a partnership and doing business together. Today, they're not. But they gave the option for all those that want to continue using AMP as their broker and NinjaTrader as the platform of choice to be grandfathered in. No one knew, okay? So, but they offer a variety of platforms for all you guys that may trade, I believe, like TradingView and TradeStation, Sierra Charts, Multi-Charts, MetaTrader 5. I mean, and the list goes on. CQG Trading or Trader. There's so many platforms they offer, so you can just go to their website, ampfutures.com. And again, they are a futures broker. So if you're interested in trading the future markets, okay, then you may want to give them just kind of give them a look at, okay? Now, taking $200, yes, it's not a lot of money, but is it possible that you can grow that amount? I mean, yeah, you possibly could if you know what you're doing and you're taking small scalps on the day. Yes, I'm a scalper, and particularly I trade supply and demand. But maybe some of you guys are here and trading different strategies, so I can't really speak upon the strategies that you may trade. But if you have something or a system that works and you only have, a minimum amount of money to get started, and I'm going to say this right now, even starting off with a small amount is good, because once you learn how to trade the correct way, meaning first and foremost, market structure, you got to understand structure of the market. Meaning understand the flows of the market. Is it bullish, bearish, trending in which direction, breaking structure in which direction, which way should you trade? You've got to form a bias based upon what the market is actually doing. So for me, like today, I talked about this in a video this morning, this opportunity right here where the market came back and tapped into this high probability demand zone where there's a gap at. If you watch the videos here on this channel, you'll understand and you'll see me walk through trades and talk about the strategy as I break it down about the ingredients to the recipe, the full-on recipe covering the strategy that I trade on a daily basis surrounding supply and demand. So when we're talking about structure of the market, we're looking to see, is the market, breaking structure lower, or is it starting to turn and break structure higher? Here what you can see, this is my higher base chart. I'm using a 120 range chart. Always, guys, I'm recommending this right now. use a top-down analysis. Start with a higher base chart to gauge the direction of the market, and then use a lower base chart to to get into a trade. The lower base charts are going to get you more to a more precise entry point. Okay. So what I saw here was when the market was, even though we were bearish at one point, we turned around and we started breaking structure back to the upside. Okay, leaving behind, push up, pull back, lower high. Excuse me, a higher low. Excuse me about that. Higher low. We haven't broken the low here. Then it breaks to the upside, breaking structure. Leaving behind with this aggressive push to the upside. This is demand. That's what demand is aggressive buying, or and supply is aggressive selling. Leaving behind this beautiful area of demand. I covered the breakdown about this trade that I took this morning and waited for the market to come back. All this trade, or the zoning which was created right here, where we had this breaker structure, was centered around the 8:30 news NFP this morning. Okay, but there was a beautiful demand zone that came out of this area. So you want to wait for the market to come back to it. Now, in this case here, yes, we are breaking structure to the upside. We're pulling back. These are what I like to classify binary areas of structure, and we are breaking some of those areas to the downside. But this is still a quality area or zone to take a trade from, because of the fact we did break structure higher. All right, and because we had this beautiful structural break to the upside, I can expect, or should expect, something to kind of kick off or happen when it gets back there. No one knows, and you don't know how long the trade is going to work in your favor, so you have to trade based on probability and understand and look above you. Once you get into a trade off the lower chart, okay, I talk about the strategy in detail in like the prior video that I did this morning, so you may want to watch that video because I break this trade down. But this was a beautiful demand setup off the higher base chart. Then what I'm doing is I just moved down to my lower base chart, and I'm looking for a demand setup on my 24 range chart. I'll show you that here briefly though, okay? But what I want to show you is that first and foremost, I want to bring up this. The broker I do use, like you can see here, these are all the trading platforms that they offer and what you can trade using them, okay? Now, what I want to do right quick is just go over to the margin so you can see whoever you choose as a broker, before you choose them, look to see first and foremost what are their margins, okay? That means the cost that you need, or the price tag involved to trade, X amount of contracts. So for every contract, say for example, with the micro E-mini S&P 500, remember what I just said? It's a $40 margin. It means I have to have at least $40 in my account to trade one contract. And that means that you have to have that money, $40, to trade for each additional contract. So if I want to trade 2 contracts, $80, okay? If I want to trade 3 contracts, $120, okay? So you have to understand that piece right there. And every market is going to carry a different margin, okay? So with like the micro E-mini E-mini NASDAQ 100, it's a $100 margin. The Dow micro, $50 a margin. AMP has some of the best or some of the lowest, and they're competitive too, some of the lowest margins in the business. So if you're interested in giving them a shout or taking a look at them and their commissions, they have great commissions as well. All right. They've been around. They are a regulated broker. I'm not affiliated with them, and nor am I sponsored by them in any kind of way. I'm just simply letting you know that this is who I've been using, because people always ask me, Mike, who do you use as your broker? I'm letting you know. I'm not telling anyone to go with them at all. I mean, there are other brokers out there that are just as great, if not better, probably. Interactive brokers, they are solid company as well. But I'm just letting you know the one that I use. And today's about margins and using $200 to be able to trade with. So if you were entering a trade, for example, and you had $200, how many contracts up to could you trade on that $200? I'm not telling anyone to do this though. Understand that, okay? You could trade with up to 5 contracts if you were using or trading with the micro E-mini S&P 500, because the margin is $40 a contract times what? Times 5, that's $200, okay? But I don't recommend going full on with 5 contracts. No more than 2 I would trade with. Really, I would stick around with 1 and just slowly build up an account, small, growing size account over time. Now, with the micros, you're not looking to you should expect, because the tick size is a lot lower than the full-on E-minis. Well, say, for example, here, the micro E-mini S&P 500, the tick value there is $1.25 per tick. With the full-on E-minis, it's $12.50, but there's a big difference in the amount and the margin, okay, when you step over from the micro E-minis to the full-on E-minis. The micros is a good way for anyone who has not started trading live yet, but has educated themselves, understand market structure, they back tested, they've been in simulation or demo, they've proven consistency even in a demo that they can make, should be able to make money, right? So if you are, have a decent win rate and you're in simulation and demo for a period of time, and you are week to week to week in the green, okay, in demo or simulation, then yeah, maybe it's time for you to switch over, take a couple $100 and then put into a live personal broker account and start that way. Doing the same thing that you did in demo and simulation. And this way you can prove, because now you can do two things. You can prove to yourself that you can be just as consistent as you were in demo or simulation, but you can also prove to yourself that when the light switch turns on and things really get real, the nerves kick in, that you can manage yourself just as well, manage the psychology and the emotions as well. And to where, a lot of people always say, is it better to start with small amounts or large amounts or decent amounts of money? Start with small amounts, because in that way you can get the feeling of what it's like to trade with live or trade with real money. And then when you start growing that account or maybe putting in an additional amount, you're not as bothered, because now you have really shown yourself and proven that you're consistent as a trader and you can grow this account. So taking $200, is it possible to grow a small account? Yes, it is. But you're going to have to trade the micros to start with, and then get your feet in the door and wet, and then slowly grow that account. Okay. I don't recommend anyone who's starting today and who's a beginner trader, and someone that has a secure job to jump into trading the micros full time with just $200. No, I would not do that at all. Okay. You have to grow that account and get it up to a certain size to where you can start trading, not say more. Okay. Meaning number of trades. I'm just saying maybe you want to kind of ramp it up and maybe trade an additional contract or two. That's what the goal is. I mean, you can actually make decent amount of money trading just 1 to 2 contracts a day. All right, but depending on the market. With the micros, yeah, it's going to be a little bit tougher to do so. But even with 1 or 2 contracts on the day, you are still proving consistency to yourself, is what I'm trying to do. Now, when you switch over to the E-minis, yes, you can trade 2 contracts and have a very good day, because then you are, if you're trading correctly, you're looking for a certain amount of profit per trade. Okay, like with the NASDAQ 100, I'm looking for a minimum of 20 points on each trade per contract. All right. Also, you want to allow yourself to allow a runner. So if you trade with 2 contracts, take out, for example, I'm just throwing hypothetically, I'm showing you examples because I talk about, and I do this in real time, trading 2 contracts, for example. First contract, take off at 20. Last contract, let it run to see where it's going to go. You may get another 20 points, 30 points, 40 points. You never know. Okay? The market's going to do what it wants to. But the go for me now, not saying I'm like specifically honing in on 20 points and that's going to be it. But yeah, I'm looking at trying to get a minimum of 20 points. That's my, that first goal, I should say, whatever the case is. But I'm here to let you know that $200 is definitely possible to get started in the right direction and build and grow a small account. Definitely. But going back to this trade today, okay, right here, the market comes back to this zone. Treat this as if this was the MNQ, the micro NASDAQ, okay? The market came down here, and you can see where it came down to 18,000, right here, 18,764. And this trade actually went up to 18,863. Beautiful run to the upside. What is that, like 120 points? No, yeah, 120 points right there, okay? So, you could definitely grab 20 points very easy or more if you allow a contract to run. This is a trade that I took this morning, and I covered that trade in the video that I posted earlier today. So if you haven't watched that, go back and watch that video as well. But what I'm here to let you know is how to do it, okay? Well, we're moving to the upside. Breaking structure, pullback, unmitigated area where there's a gap at the demand zone. That's what I want to see, okay? I talk about that in many videos. If you don't understand what I'm talking about when I say unmitigated or gap zone, it's just basically where the market pushed away from the zone with nice force here to the upside after breaking this area structure above 18,815. All this buying is demand. It comes back to the area right here where there is no gap at the area, meaning from the top of this red candle right here, all right, this green candle that broke above it, no candle came back and closed the gap in between the 2 candles there, all right, until it came back right here, and then it tapped into the top end of that red candle right there. Okay, that's where we got the It went from being unmitigated to mitigated when it came back right here. So what I do then is I'm already marked the zone up off the higher base chart. Then I just move down to a lower base chart, which we're going to go to right now. And you see right here, the larger zone there, that larger rectangle box, again, that is just the 120 range zone that I marked up, that demand zone. And then all I'm doing is looking for a zone. Typically speaking, if there is a zone within this zone, meaning a 24R lower base chart demand zone within the higher base 120 range demand zone, then that's going to raise the interest. And then from that point, when it taps into, you got to tap into the first higher base zone, tap into the lower base zone, 24 range. Then I'm just looking for the break and close of the candle above, meaning the last bearish candle to the downside, the next bullish candle that breaks above that and closes, I'm going long. Okay, that's going to give me the rejection and confirmation. You do this repetitively, okay, time and time again. Not going to say every setup is going to work, because no strategy works 100%, regardless of the fact is, it's all based on probability. But the more you spend time doing this back testing, you'll see that these type of setups work if you're taking the trades, the right opportunities, okay? Because I'll talk about, in reference to legs, where, which trades make more sense when it comes to areas of supply and demand. If we're looking to take a trade going long and you have a beautiful leg to the upside, but you have multiple demand areas, normally the trade is going to work out the best. It's going to be the one at the latter end of that leg where you have a beautiful break of structure and you wait for it to come back, okay, versus something sitting higher up, okay, because the higher the market starts to move and it starts to have several breaks of structure to the upside, at some point you must understand there is going to be a significant pullback downwards, okay, regardless, whether they're going to break lower and break a low or continue just retracing back to get a nice pullback to a key area of demand lower and then breaking structure back to the upside, taking out a high. You got to understand how the market moves, okay? And again, trading is based on probability. So which zones make the most sense? But being able to grow an account of just using or having $200 worth of capital into a personal account is definitely possible. But definitely do it and start doing so with the micro markets, okay? Like the micro ES or the micro NASDAQ or micro Dow or even the Russell. Start slowly, okay? And trade. Again, don't jump in with 5 contracts. I mean, if you have $200 and you want to go full on with 5 contracts, that's up to you. I'm not telling anyone what to do. But if you want, because if you get in and the trade comes back against you and you take a loss, then what's going to happen? You're going to have to fund that account again. Yeah, $200 is not a lot of money, but nobody wants to lose even $200. Heck, even $100, okay? But, it's going to happen. But don't go full margin on something on accounts that you only have, whatever your account is valued at, okay? I'm not going to go in with 5 contracts if I just have a $200 account. If I want to keep that account, then I'm going to trade smart. I'm going to go and trade probably with 1 contract and build up today, tomorrow, maybe by the end of the week, if I can get it up to make where I made a few $100 or whatever the case is. Next week, maybe I'll trade with 2 contracts. So I'm not here to tell anyone what to do or how to trade with their money or what to do with their money. I'm just simply telling you that if you want to become profitable and be consistent, then you're going to have to put in some parameters for yourself, trading parameters for yourself so you can trade around, all right? And be able to save yourself to trade tomorrow and not have to go back to the bank again to put more funds into your account, all right? But anyways, hopefully you found some value in today's content. So if you're not a subscriber, please take the time, click on that sub button down below. Spend some time watching the videos because we have lots of people who come to the channel. The purpose of the videos is to share with, I know I'm basically for free sitting there. Just spend time watching the videos. You can educate yourself if you watch the videos, and with everybody's different. So within probably a short period of time, you could be on your way to becoming a profitable and consistent trader. Now, to all those that want kind of I'm not gonna say quicker or a I'm not sure what the word to use, but anyway, a fast turnaround, I guess I should say, because everybody is in hopes of the holy grail to be able to trade, right? There's none. It comes with hard work, patience, dedication, back testing, forward testing, demo, sim, all this stuff to get you up to the point to where you ready to start trading live. All right, so what I'm here to say is that I've got breakdowns of trades to where you can watch and understand, because this helps. When someone can walk you through trade setup after trade setup and break down the thought process behind the trades, eventually you catch on, right? You can see it. Oh, that makes sense. I understand that trade too. I understand that trade. So to all those that are part of the elite membership, and you guys know who I'm talking to because you are part of the elite membership, the private community, thank you for investing in me as a content creator, because that is one of the perks and rewards that I give back, is you invested in me, okay, by becoming an elite member, and I've created this video content for that private community, which is the trade breakdowns, the video playlist, and that market structure video I did. I'll be doing other video content as well, but there are tons of trade breakdown videos on there. But what I'm trying to get at is that for a very, very nominal fee of only $6.99, you can gain access to all that private information, okay? All that great information covering these trades. That's where I really go into detail, the nitty gritty, and going into detail about these setups. Ones that I post over on the Discord community, those trades, I walk you through them and break it down to the private community. So if you're interested in becoming an elite member, the link is down in the description portion of the video, as well as the Discord. First link, Discord. Second link is the link to become an elite member. If you click on the link, 2 tiers will pop up. Choose the one for $6.99, and you'll gain direct access to the membership private community, okay? Outside of that, that's all I have for you guys today. I appreciate you taking the time to watch today's video, and anyone that spends and watch every single day that watches the videos. Thank you for doing so. Thank you for being part of the community just as well, and have a great weekend. If you found value in today's content, do me the biggest favor. Click on that like button, okay? Go ahead, click it right now before we get off, all right? I'll see everyone in the next video. Take care.